Good morning. Welcome to Facebook Live here at KPP. I'm Rob Davenport, the CEO of Kentucky Planning Partners, and happy Thanksgiving to all of you this week. We've got a special guest this morning, one of our team's very own and favorite new members, Ben Hopper. So good morning, Ben. Welcome.
Thank you. Good morning, everyone.
We're excited to have you, and we're excited to introduce you to our clientele when they've come and seen us these last year and a half, and anyone else out there watching. Ben, you have really been an exceptional new team member, and on behalf of Ken O'Neill, my business partner, and myself, we just couldn't be happier that you're on the team.
Well, thank you. Appreciate that, Rob.
But how about we just do this? Just because people who do business with our team are really going to get to know you.
Absolutely.
So let's spend just a minute introducing yourself, okay?
Sure. Well, my name's Ben Hopper, like Rob mentioned. If you're a client or anyone we meet with through Rob and Ken, I'm in on all of those meetings. So I've been here since 2018. Graduated from Western Kentucky University in 2019. So in 2018, I met Rob and Ken through WKU, did an internship with them in the summer of 2018, got to know the team, got to know more of the business, how things kind of work around here, and then kept working with them through my senior year of college and started full-time in May 2019. So it's really been an exceptional experience and a great start to my career. I can't be happier.
You are more mature at age 23 than I ever was. You do a great job, and and Ken and I are just so happy with the work that you do for us. And thank you. So today we're going to talk a little bit about our investment process, because I think this is a topic that people really need to understand. Prospective clients need to understand this, regardless of whom they do business with, or regardless if they do this on their own, which I hope they don't. But if they do, I think we're going to talk about some things today that might help. So, in my opinion, there are a variety of different types of advisors in the business today. There are fee-only financial planners who focus on the financial planning aspect of the business. They do no investment management. They usually charge a planning fee or an hourly fee. There are fewer of those types of business models, but those business models are very credible and they work very well for planning advice. Then there are those advisors who do some financial planning, and they also are in the business development or the sales side, the asset gathering side of the business. But they don't actually manage the accounts. They many times will use outside money management firms to manage their client accounts for them. Maybe they have some setup with their broker-dealer where they use some modeling. But they're having to pay somebody, or you're having to pay somebody to manage those accounts. So they might do some financial planning, they might gather some assets, but they're really not acting as portfolio managers. And here at KPP with our team, we're going to provide the financial planning. We're going to, of course, attract business, the right way. But we are going to actually act as portfolio managers.
That's right.
So, Ben, let's talk about that. Describe how we, in not too much detail, we don't want to give away our secret sauce, but what do we mean when we say we actually perform the portfolio management?
Right. So you could think of it as an analogy as like someone flying the airplane, right? So if you're in the airplane, you've got a pilot, and they're the ones that are making the moves, right? So if we're the portfolio manager, we're going to be pulling the levers. So what we do is we're going to select funds from the universe that we have to pick from: stocks, bonds, mutual funds, exchange traded funds, REITs, you name it. We're going to create portfolios that are designed to help our clients achieve their goals. And what I've found through our process is that acting as that portfolio manager, like Rob just described, it really helps us get to know our clients better. It helps us build them a more comprehensive plan that's aligned to what they want to achieve. Whereas if we were just the portfolio manager or just the financial planner, just doing one or the other, you might not really understand a client's full situation as well. So being both really helps us engage with our clients more, provide more value, and that sort of thing.
So I know the answers to these questions I'm about to ask, but I want to ask you so that you can give the audience the answer. Does every client here then have a different looking portfolio? Or do they have similar portfolios?
Right.
How does it work here?
Yeah, so we kind of have the option of doing one form or another. What we've done on our team to scale and really help our clients the best is build models. So in our models, we've got about 8 different ones that are going to range in risk. So how much risk a client's willing to take is what model we're going to recommend they use. And so because we use models, we're able to monitor the funds in those a lot more effectively than if we had all of these customized investment accounts that have different funds in them. It can be hard to track and that sort of thing. So but some clients do have custom accounts. We might recommend a number of funds that they use, and they use those funds, and then say they like a particular stock or they like a particular something else to kind of make them a little more customized. We do that as well.
Yeah.
So.
Well, so the models are actively managed, but Ben, how do we actually put those models together? Okay, we've used the terminology an all-star lineup. Mm-hmm. So if we're wanting to have a couple large cap funds in the in one of the models, as an example, a large cap growth fund, for example, how do you go out? What technology do you use to go out and determine which fund we should use?
Yeah, great question. So the first thing we're going to do is all the companies that we use. You've probably heard, if you've been on Facebook Live in the past or seen our other videos, that we're partnered and affiliated with LPL Financial. So through LPL Financial, the largest independent broker-dealer in the country, we're able to find funds from Fidelity, funds from Vanguard, funds from First Trust, Eaton Vance, Lord Abbett, all the different companies out there that make these products. Mm-hmm. And the first thing we're usually going to do is talk with these companies, get to know their representatives, get to know their wholesalers, as we call them, and they are able to give us information on their funds. So after we do that, we might use some software program. So we'll use Morningstar is a big one. We use Zacks Research. Mm-hmm. We'll use Riskalyze. All these different tools that are, for you all as investors, as clients, you might not be familiar with, but it's important that advisors are, so that we can best serve you, best find all the statistics we need to know, the best funds out there. Like Rob said, we're really trying to build an all-star lineup of funds.
That's right. So what's important is we want to try to do business on your behalf with the fund companies or the product manufacturers who consistently perform in the top 25% of their respective category. So there's no reason for us to do business with a fund or an ETF or some type of product that's ranking near the tail end of their category in performance and fees and things of this nature. Sure. So we have a way of looking at the universe of all the different products out there and filtering down and only finding those that are consistently performing at the top of their class. So we want to do business with products that are manufactured by companies, that are managed by management teams, that perform at the top of their class consistently year after year after year. And we internally here monitor all of this to make sure that our all-star lineup is continuing to remain an all-star lineup. Absolutely. So, but we're agnostic. We have absolutely no affiliation with any of these firms. So that's important because it has to be objective, and we have to always look at the technicalities associated with all these products. We read a lot into this analysis when we build models. True. We put these pieces together to make up a portfolio. It may be a real conservative model. It may be a real aggressive model. But let's talk about some things that we look at. And I don't want to get way too technical here, but these are terms that I think people should know. Mm-hmm. So let's say we're looking at a stock-based portfolio, okay, an aggressive portfolio. Mm-hmm. And we see the word beta. Beta. Ben, tell us, what does that mean if we have a model that's coming in with a 0.90 beta? What does that mean?
So beta, Greek letter, you might be like, what in the world are these nerds talking about up here? But beta is a measurement that we're going to use to look at a investment, a fund, or a portfolio's volatility. So how much risk does it carry? You could think of it like that. And if it's got a 0.90 beta, that basically means that it's going to be 10% less volatile than whatever benchmark you're comparing it to. If you think of a stock, that's usually the S&P 500. So the broad stock market, if it's coming at a 0.9 beta, it's going to say that it's 10% less swingy, so to speak, than the market is.
So the S&P 500 would have a beta of 1.00. If our model comes in at 0.90, it is 10% less volatile than the S&P 500.
Exactly.
If it comes in at 1.05, it's historically 5% more volatile than the S&P 500.
Exactly.
Why does that matter? Well, clients don't like volatility. So we're trying to build even our growth portfolios with as low beta as possible so that clients don't experience that turbulence. You mentioned the airplane analogy. Okay, so then we have other things we look at. Upside capture, downside capture. What does that mean exactly?
Yeah, so how much is it overperforming? If markets are doing well, if we're in a bull market, upside capture is going to show us how well it's doing compared to the rest of the market. Is it capturing that upswing as much as it should be? Is it doing more? Is it doing less? Whereas downside is going to measure, when things aren't as well, what is it capturing on the downside? Is it getting hit hard like the rest of the market? Is this stock or this company getting hit less than the rest of the market? Those are some other metrics we'll look at. And then you've got things like alpha. We mentioned beta.
Right.
Alpha and beta, you maybe have heard those paired together in other ways. Alpha is a measurement of how well a portfolio manager, how much above a benchmark is it performing. So is what we do as portfolio managers, is what these companies do as mutual fund managers, is it giving us any extra juice on our investments?
That's right.
If it's got a negative alpha, usually alpha is going to range between -2 and 2, and we want to go above 2, but if alpha is negative, then that's showing us that it's underperforming, and what you're paying for might not be worth it if it's underperforming. Not to get too far into the weeds, but these are some of the things that we...
Well, it is nerd talk, but the reality is it's your money, and you just need to know that we know what we're doing. And at the end of the day, we're trying to build and obviously monitor portfolios that have as low beta as we can possibly create, as high alpha, excess return per unit measure of risk that we can possibly create, as much upside as we can possibly create with minimizing downside. Now, that sounds beautiful. You've got to stay on top of this. This stuff is changing, and we have to stay on top of it, and we do. That's what we do, and we do all this under a discretionary basis for our clients. But
if it was easy, we probably wouldn't have a job. So.
Everyone would do it.
Exactly.
At the end of the day, remember, it's about the financial planning first. You have to build a financial plan. And then once we have that financial plan established and written and understood where we can all look at it, then we need to understand the risk we should be taking or not be taking. And then we can determine which models or which custom portfolios we want to use. Many times clients will use a combination of these models because some money has a very long-term perspective. Other monies might have a shorter-term perspective. So we have to keep these things in check and understanding. So what else? We probably have just a few minutes left.
Sure.
Our team with Miles and Ken and myself and Kyle Roy, who's been a tremendous new addition to our organization, and yourself, I think and Anne Marie, really the glue within our operation. I think we're doing all the right things, but we are open for business. We do want to help more people. We want people to come to us with an open mind. We are not going to try to sell anything to anyone because that's not how one should behave. Rather, we just want to find out what you're missing in your life and how we can help you from this financial planning and wealth management perspective. So one neat thing going on here is our Toys for Tots drive.
Yeah.
We've got our lobby, and Sonia, our Chief Compliance Officer, has created this Toys for Tots drive. I think this is year 2 or 3, isn't
Three,
it?
I believe. Third annual.
And we've got bicycles in the lobby now. We've got all kinds of stuff.
Yeah.
If you want to somehow find a way to give to Toys for Tots, just come over to our building. We're on the top floor of the Flash Cube building at Hurstbourne and Shelbyville Road, and drop off a toy. We might ask to take your picture, and if you so comply, great. But the gifts are going to be picked up on December 5, and we're also going to make a financial contribution. We don't think kids during this year in 2020, let alone anybody, should suffer this holiday.
Absolutely.
So if we can do our part at KPP and help bring a smile to a child's face this Christmas, whether it be with a stuffed animal or a bicycle or a basketball or soccer ball or a doll or whatever it may be, I think that's the right thing to do.
Yes.
So
absolutely. Yeah, and you know, if you're out there watching in today's world, especially with coronavirus and all that's happened this year, you know, what we found is that a lot of clients and people we meet with like to meet virtually. So,
That's right.
you know, if you are watching this and you're not in Louisville, Kentucky, you know, Rob mentioned where we're located, but we do a lot of virtual business as well. So
That's right.
if you ever want to talk to us or meet with us, we're happy to do webinars. We're happy to talk over the phone. You'd be surprised at what we can accomplish and how much value we can create for you if you're anywhere in the country. So
That's right. That's right. The virtual meetings have really been new to us this year, but they've actually been fun. They've been exciting, and we've accomplished what we set out to accomplish, whether or not they're in person or virtual. I'd say 80% of them have been virtual this year, but they've been well conducted, and it works. So we want you to feel safe, and we want you to seek help if you don't feel as organized at this point in your life as you possibly could be. We're here to help you. There should be no anxiety to come see us. We're not going to do anything other than behave professionally and try to help you. Any concluding remarks?
yeah, no, I've enjoyed this. Thank you for having me on. I've been the last several Facebook Lives. I've been the guy behind the camera, pushing the buttons, seeing who's on and the numbers and all that. But it's very exciting to finally be able to get in front, and I'm sure in the future hopefully we'll be able to again. One more thing I do want to mention, we do have Kyle Roy, who you've seen on the show the last few times. He is hosting a WebEx on a week from this Thursday, and that is December 3rd, and that's on Social Security. So it's our second installment of that he's going to be doing. So register for that. We'll have links for that webinar posted and sent out and that sort of thing. And be watching on our website. We've got a new and improved website that we've been working on, kpp-lpl.com. We've got resources on there. We've got content, some videos. Check us out. And if you ever have questions, anything that you think this information pertains to you or you see that we can help you with, give us a call. Shoot us an email. 502-394-0400. 502-394-0400. And we're here to help. So.
Thank you. On behalf of our team, we wish you and your family a happy and healthy Thanksgiving this week. God bless you and this country. And with that, we'll say adieu. Thank you.